Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. February's US employment data released on Friday was disappointing. Non-farm payrolls were close to expectations, but other indicators showed significant deterioration. The labor force participation rate dropped, overall unemployment increased, and the broader U6 unemployment rate jumped. In response to these developments and declining government bond yields, the euro gained 48 pips. So far, signs of a crisis have not fully emerged but are anticipated. Even Federal Reserve officials and key business leaders are hinting at potential economic challenges. Christopher Waller has suggested that the Fed may lower interest rates 3 times by the end of the year. Meanwhile, the euro is expected to rise further, targeting levels of 1.0949 and 1.1027. Given that the Marlin oscillator is nearing the overbought zone, a correction could occur from one of these levels. On the 4-hour chart, the Marlin oscillator has reset after a sharp decline from its peak on March 5-6. It is now positioned to resume growth with renewed strength, aiming to break above the nearest resistance level, 1.0882. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 105 pips, which is considered as moderate for this pair. On Monday, March 10, we expect movement within the range defined by the levels of 1.2815 and 1.3025. The long-term regression channel has turned sideways, but the overall downtrend remains visible on the daily timeframe. The CCI technical indicator has recently stayed out of overbought and oversold areas. The GBPUSD currency pair maintains a medium-term downtrend. We still do not consider long positions because we see the current upward movement as a part of a correction. If you trade purely based on technical analysis, long positions could be considered with targets at 1.2939 and 1.3025. If the price remains above the moving average, the sign line on the graphic. However, sell orders remain much more relevant now, with targets at 1.2207. It's a thin sign line on the graphic, and 1.2146 is the purple thin line on the graphic, as the upward correction on the daily timeframe will eventually end. The British pound appears extremely overbought and unjustifiably expensive, but Trump continues to push the dollar into free fall. How much longer this dollar collapse will last is difficult to predict. That's all for today. Wish you best of luck.